Good morning, everyone, and welcome to our webinar. This is Courtney, the Marketing Coordinator here at AIM. Today's webinar will be recorded and later posted on our website. This does mean that all attendees will be automatically muted so that we can get a quality recording today. If you have any questions, feel free to type them into the chat box and we'll try to answer them throughout the presentation. But if we're unable to answer all the questions, we'll have a member of our marketing team reach out to you individually to make sure that those get answered. Our newest agent resource, the 2-Minute Minute, is in full swing. Our marketing team is bringing you quick ways to talk to more prospects, write more business, and grow your agency. We're posting new videos every week, so go ahead and check our social media pages, Facebook, LinkedIn, Instagram, and YouTube to see what you might have missed. We do have webinars every Wednesday morning, so keep an eye on your email for the next invite coming your way. With that, I'm going to hand this over to Mike so that we can get started today. Go ahead and take it away, Mike.
Thanks, Courtney. Appreciate everything you do to help us out with all these kinds of things. Good morning, folks. Mike Anderson here. Really pleased today to be joined by Kyle Chontos and Luke Ashmore, two key people on the nationwide team and two great resources for us. And we're going to spend the next few minutes, and they're going to really kind of bring you up to speed on why it's so crucial to have as many resources as possible in the long-term care space. For a long time, there was a movement toward narrowing down long-term care pathways, if you want to call it that, and you would have Company X really pushing hard that they were the single best solution, and Company Q and Company Z, the big wholesalers, et cetera. What we've come to realize in the last few years is the broader that we can make the market, the better it is for the agents, you folks, and the better it is for your prospects and clients out there, because we're not just solving for pure need anymore. We have to solve for tolerance. And when I say tolerance, talking about awareness of rate increases and awareness of use it or lose it concepts, both of which get taken off the table when you're able to bring a product like CareMatters out in front of your clients. So the work that Kyle and Luke do as part of that team has never been more important for you out in the field as it is right now. Like Courtney said, we'll be looking at and kind of sifting through questions, and we'll interject those during the course of the presentation as appropriate. Otherwise, we'll tackle them at the end. With that, I'm going to quit chattering here, and I'm going to go ahead and turn it over to Kyle Chontos, our regional wholesaler. He's going to run most of the presentation here. Luke will be available as necessary. And as you can see, Kyle's got that sporty two-tone brown tan look going there in the home office. So Kyle, welcome.
Yes, thank you so much, Mike. Thank you so much for Courtney as well for setting this up. Just wanted to pop on camera really quickly and say thank you. We're really excited about the partnership and being able to talk with you today. So just wanted to say thank you. We're excited. You have my information up on the screen there. You have Luke's information on the screen there as well. Work through Mike and Courtney, but just know we're here to help you. You know, through this new Integrity Nationwide relationship, there are a lot of resources that are available to you. We have two dedicated just long-term care wholesalers, Luke and myself, that are dedicated to you, and we're really excited to partner with you and get the business off and running. So with that being said, I'm going to go ahead and stop sharing my webcam, going to start sharing my screen, and then that way we're going to go right into the presentation here. So what I wanted to focus on today is, number one, talk about long-term care and the offerings where CareMatters fits, right? So we now have the individual product that's available called CareMatters 2 for one person on that long-term care side. We also now have a CareMatters Together product built for two people that we're really excited that just launched a couple months ago. So we're going to cover both of those products as well. Before we go there, we just wanted to talk about having the conversation around long-term care in its entirety first, right? So hopefully you're not new to long-term care. You might be new to Nationwide, and we're going to position this in a way to really help you kind of figure out where Nationwide makes sense. So with a couple things from start, want to be very clear. The CareMatters 2 product that we're talking about first is the individual product. It is available in every single state across the United States. We do even have a New York product available as well. And then our CareMatters Together product is available in every state outside of California, and New York. So pretty much every state, you have a solution that's available to you. And why long-term care is important is why we're here today. So I always talk about stories. I think storytelling is very important. I'm very passionate about long-term care. Unfortunately, both of my grandparents ended up in nursing homes, and we're not ideal situations, right? And most people, when they think about long-term care, they have a negative connotation to it, because when they hear those three letters, psychologically they shut down because they think of a nursing home, and they've probably had a bad experience as well. So having the conversation, and what I've been talking to most folks about now, is when you're talking to clients about long-term care, you need to approach it as long-term care is an event that you must plan for. And what do I mean by that? If you're sitting on this call today, hopefully you're saving for your retirement, right? If you have children, hopefully you're saving for their college education one day. If you have a daughter like myself, I'm saving for a wedding that I'm going to have to pay for one day. Those are all three things that are 15, 20 years down the road, but yet me and my wife have already made a plan of how to save for those, right? We're putting money aside every single month to save for those events that are in the future. Yet nobody thinks of long-term care in that way. Nobody ever thinks, hey, I need to plan for long-term care. Normally what happens is a client comes to you and they're already uninsurable and they're already needing long-term care and it's too late, right? So being able to prepare clients for long-term care planning is really, really critical right now. And we have a great opportunity inside the long-term care atmosphere and partnering with Nationwide to go ahead and do so. So with that being said, I want to focus really quickly before we go into any product details on why Nationwide needs to be at the front of your book of business, right? Why would you want to partner with us? And it's because we did this study back in 2021 that 80% of clients want to receive care in the comfort of their own home. Well, Nationwide is a cash indemnity product, right? So we're going to be able to pay your clients cash for them to receive those benefits however they would like, without restrictions, in the comfort of their own home, which pairs really nicely with the marketplace. Most people do not want to go into a nursing home if they can avoid it. We can pay for clients to receive care in the comfort of their own home with a Nationwide solution. We can fund them if they want to go into a nursing home. We can still pay for that as well. But we know, based upon this study, that people don't want to end up there. So having a policy in place where clients can receive the benefits where they want to receive them is especially important, and why Nationwide is at the forefront in the linked benefit industry. So the advantages of a linked benefit policy. We know you guys do a lot of standalone policies, traditional policies, etc. We want to now bring you in on this linked benefit space. And we think we have a great opportunity now with the new relationship to really educate and grow this business partnership together. So who is a linked benefit policy designed for? It's designed for someone that's probably 40 to 70 years old, right? That's your target demographic. If you're sitting on the call today saying, who do we look at for this type of a client? 40 to 70 years old that are looking to maximize their long-term care needs, right? That's what folks are really trying to do with this linked benefit policy. Remember, linked benefit too as well, that means there's a death benefit attached to it. So those old standalone use it or lose it contracts, that's not this. We do have a death benefit payout that if your clients never use a single dollar of long-term care, we'll still pay them out a death benefit. And in fact, even if your clients use all of the long-term care in this product, we'll still pay their beneficiaries a death benefit when they pass away as well. So utilizing that linked benefit policy is extremely crucial and what people really, really like there as well. And also too, Mike had done a good job mentioning this, right? It's not a situation where Nationwide can ever come back and ask for more premium dollars from your client or come back and raise rates, right? There was a large carrier a couple weeks ago. They made a big price increase to their carriers, right, to their policyholders. Nationwide can never do that. Every feature that we're talking about today on this webinar is fully guaranteed. And that's why people really like this new solution, an innovative solution, because it is fully guaranteed. The premium is guaranteed. The long-term care benefit is guaranteed. The death benefit is guaranteed. The cash value is guaranteed. So you can now sit with your client and say, Mr. or Mrs. Client, for the next 50, 60 years, you know exactly what your premium is going to be. It's never going to change. You know exactly what your long-term care benefits are going to be. They're never going to change. And it really provides that comfort level for your clients that even if the market tanks tomorrow, they're still going to be covered with their full LTC benefits from Nationwide. So it's a huge resource of why do people like linked benefit policies. That's exactly why. The guarantees that it provides, and also too, immediate leverage, which we'll show through an illustration later today. You make one premium payment, you have access to a large pool of guaranteed long-term care that's available to you right away. So those are the features of a linked benefit policy. We think this is really a great opportunity for you guys to really partner with us and move into this space if you would like, because of those those features and allowing your clients that comfort to go to sleep every night and say, hey, everything's guaranteed and my long-term care is taken care of. So what sets us apart? These are what I call pillars, right? Nationwide CareMatters is built on pillars: familiarity, choice, and flexibility. Those are the three words that we always describe CareMatters with when Luke and I do presentations. And oftentimes familiarity is, right, well, what is the premium, right? I know what my premium is and it can never change. So your clients have a $500 a month premium, it's going to be $500 a month for their premium duration. It can never change. Nationwide can never come back and ask for more money. That's extremely valuable in today's day and age with the ever-changing market. But most importantly, too, familiarity, we started the presentation with it, 80% of people want to receive care at home. Now we can provide that source to them, because now they can receive care from folks that they are comfortable with, their loved ones, their spouses, right, their kids, people that they feel comfortable with. That's called informal caregiving. Nationwide can pay for that. We can pay that spouse to administer care. We can pay that adult child to administer care in the comfort of their own home. So it's a really great combination of being able to pay cash to your clients, allowing them to receive care in the comfort of their own home, and everything being guaranteed that they know exactly what their benefits are going to be and they're familiar with them. And that is very, very valuable as we head into this, I would call it changing times here in the dynamic where baby boomers are starting to, really hit 65 every single day. People are starting to age out. There's a tremendous opportunity to help a lot of people in the long-term care space, and having guaranteed familiarity is really going to go a long way for you and your business there. Choice. So now we go to the next step. Well, now maybe you want to partner with us and you're thinking about devising a long-term care plan. There's really a lot of solutions that are out there for you to customize this type of a product. So there's 5 different premium payment options. We can do a single premium. We can pay for 5 years. We can pay for 10 years. We can pay to the client's age of 65, or we can do what's called an all pay to 100. And we can pay these examples monthly or annually in this example. So 5 different premium payments that your clients can choose from. 4 different inflation options for once inflation is good, right? We can start with a lower long-term care threshold and grow our benefits over time with inflation. So we have 3% simple, 3% compound, and 5% compound as well. And then we have refund of premium options. So maybe you're meeting with a client and they're not 100% sold on this, and they're like, hey, I maybe want an out on this type of a situation. You can add as a rider a full refund of premium. So your clients could potentially walk away down the road with all of the premium dollars that they put into the contract. Now that's a rider that must be added on at the time of issue, but that is a huge resource to you as well. So your clients could say, hey, I want to take a shot at this. I really like long-term care, but I want an out just in case something happens. You can add that rider on as well. So keep that in mind there. There's a lot of customization in this product. And then finally, 1035 flexibility. Although we're talking about this in the form of a long-term care product, it is still considered a life insurance solution. So you can 1035 old policies in there. So we're seeing a lot of that right now. You're meeting with clients, their needs have shifted. Maybe they have an old VUL or a old whole life policy or IUL contract that has cash value there. You can now meet with them and say, hey, Mr. and Mrs. Client, let's shift that now to your long-term care policy because your needs have shifted. You don't need that death benefit anymore. You don't need that cash value anymore, but you do need long-term care. So keep that in mind. You can 1035 into these types of a contract. And then the final pillar, and I think it's most important, is the flexibility that this CareMatters product provides. I mentioned this already a bunch of times, cash indemnity, right? That's our big calling card. Everybody on the call today knows cash indemnity versus reimbursement. We are trying to make it as easy as possible at Nationwide for you guys to stay out of the claims business. So there's no need to submit those bills and receipts every single month, right? The policy owners can receive 100% of their monthly benefit, whatever that is. If it's $10,000 a month, they are going to receive $10,000 a month, and Nationwide cannot place any restrictions on how they utilize those funds at that time. So that's really, really valuable for you guys as advisors, right? It's really, really valuable for those clients as well, because now every decision-making process is back in the hands of the client rather than that reimbursement carrier with that opportunity to potentially say no to them, right? Now the decision-making is back in the insurance company's hands. We are trying to keep this as flexible for your clients as possible. We call it future-proof as well, right? We don't know what technology is going to come about in the future. AI technology, right? Robots that could potentially be administering care. There's a lot of stuff going on in that space. cash is always going to be king, and we're going to be able to pay your clients cash and let them choose where they want to receive care and who it's from. So it's really, really valuable here. So I did want to just run into a quick case study here from a numbers perspective, just to give you some idea of that leverage conversation that I talked about earlier. This is Lisa. This is an example of a 55-year-old female. She has $100,000 that she received from a death benefit payout. She already has life insurance, and she already has maybe a retirement plan, but she knows, hey, I'm 55. I'm right in that target market of needing long-term care. She does a one-time single premium into the contract, and boom, now she has over $500,000 of guaranteed long-term care that she can receive however she would like. And in this example, we would pay out over the course of 6 years of benefit. So really, that's the leverage that we're talking about. So she puts in 100 grand, she's done paying, never has to pay a single dollar ever again. Now she has a guaranteed pool of $545,000 that are available to her. Really, really valuable solution in that single pay option. So I wanted to highlight some features again, just because we go through everything quickly. This is nice to kind of put it all in one screen here. So remember, cash indemnity, right? That's Nationwide's calling card. There's no restrictions on how the funds are used. 5 different premium options: single pay, 5 pay, 10 pay, pay to 65, pay to 100. Utilize that pay to 100, guys. Really stretch those premiums out. I know oftentimes, right, you're in that standalone industry. They do a lot of that. We can compete really well in there as well. 1035 flexibility. You can 1035 into this particular solution. So keep that in mind. Inflation, we went through those. Refund of premium options that are available as well. These last two, in my opinion, really set Nationwide apart from the other carriers out there. So retroactive elimination period on our product. What does that mean? So for the first 90 calendar days, we have a situation where people have the question, for the first 90 calendar days, and I see a question here and I'll answer that in a second. 90 calendar days, there are no benefits paid. Right? So for the first 90 days, we are calendar days, so Saturdays and Sundays count. There are no benefits paid. However, on day 91, we're going to back pay your clients for the 3 months that they missed plus month 4. Okay? So on day 91, we're going to send your clients a check for 4 months of benefits. So if your clients have a $10,000 a month policy, we're sending them a check for $40,000 tax-free. And so the question works perfectly into what I just said. Can the benefits be received on a tax-free basis? Yes. As long as we're below the HIPAA per diem, which is $12,600 per month, those benefits will remain tax-free from Nationwide and tax-free to your client. So that retroactive elimination period, same thing. If it's $10,000 a month, even though we're depositing $40,000, it'll still all be tax-free because $10,000 is less than $12,600 of that HIPAA per diem there. So utilize this to your advantage. This really sets Nationwide apart from a lot of competitors out there, being able to deposit a large lump sum into your client. It's the only product at Nationwide that does this. And so it's a really advantageous thing to talk about when you're talking about your clients. And then finally, separately identifiable premiums. If you're an advisor on here who works with business owners, we have split out the life insurance cost of premium and the long-term care cost of premium. So now you could approach that business owner and say, hey, Mr. and Mrs. Business Owner, have you thought about providing long-term care to your employees as a way to retain them, right? They probably have been offered life insurance. That's pretty common, but not many employers out there offer long-term care. So now it's beneficial. They can retain that key employee, but now they can also get potential tax deductions as well if they utilize this CareMatters 2 product. Depending upon the business classification, C Corp, S Corp, LLC, right? That's where we're going to look at what's deductible and what's not. But just know that that's a great feature out there that's available on this product. If you're working with small business owners, you have a really great opportunity to approach them and get them some tax deductions as well. So I'd shown a case study before of Lisa, right? She was 55. She did a single premium solution. But you may be sitting on there and saying, hey, Kyle, you know, not everybody has 100 grand laying around, right? We wish everybody did, but that's not really reality a lot of times. So this is an example case study where we're going to show a longer premium schedule. So this is Michael. He's 50, right in our target demographic again. He doesn't have the single premium threshold. So he's going to utilize a longer pay situation. What I mean by a longer pay situation is he's going to pay for 10 years monthly, $550 a month. So he's going to pay from years 50 to age 60. He's going to be done paying at age 60, never have to pay another dollar again. And then that means he's going to add that 3% inflation rider on for compounding inflation, because he knows, and you guys know as advisors, at 50 years old, there's not a great likelihood that he's going to need long-term care, but he's going to need it at years 75, 80, 85 years old, right? So we're going to grow his benefit over time. So his day one value, as you can see here, if he goes on claim on day one, he has $3,432 per month to be distributed across 6 years. That's a total of $266,000. But like I mentioned, right, age 80 is what we're looking at. That's the average age of claim inside the United States here. Look at what this has grown to, guys, now. $8,331 total coverage now, $646,000 of LTC. He put in $66,000 over the course of 10 years, and now at age 80, it's grown to 10 times his investment. Fully guaranteed, fully cash, full tax-free ability, no restrictions from Nationwide on how that client utilizes that $8,331. And oh, by the way, that last line there, right? If he never uses a single dollar and he passes away early unexpectedly, we'll still pay him a death benefit payout as well. So it's not a standalone use it or lose it type of a situation there. So that's a great way to utilize a longer pay situation. This is a 10 pay. We'll look at maybe an extended pay and an illustration here at the end as well. And then this just summarizes everything I said about the elimination, right? So remember, 90 calendar days. There are some carriers out there that are service days. So keep that in mind. Elimination period is going to work through faster. No benefits are paid for the first 90 days for Nationwide. Day 91 hits, though, we're going to pay your client 4 months of benefit. So really, really valuable there. We ran through that first product. Once again, this is the individual product, CareMatters. It's available in every single state for sale. Your target demographic is going to be 40 to 70 years old. This is clients looking to maximize their long-term care needs, right, through the course of utilizing the LTC. We have the ability to pay this 5 different ways. We have inflation riders. We have the retroactive elimination period. But most importantly, right, every feature that we talked about is guaranteed. That is extremely valuable. Like I said, there was a major carrier out there that just raised rates. Mike had alluded to this at the start of the call. Nationwide cannot do that. We can never come back and ask your client for more money. It's really, really valuable. And then on top of that, pairing it with the cash indemnity story, being able to tell your clients, hey, Nationwide's going to send you cash, and there's no restrictions on how you utilize it. That's where we think we win a lot of ball games there. So just keep that in mind there. So now I'm going to head over now to the second part of the presentation, right? So I mentioned we have an individual product. Well, now on July 1st of this year, we launched a joint product. It took us about 3 years to build this. We saw an opportunity where there was only one other carrier in the marketplace. They were reimbursement. We are now the first ever cash indemnity joint long-term care solution. It's called CareMatters Together. It launched, like I said, July 1st. It is available in every single state outside of New York and outside of California. This, guys, is a game changer in my mind, and let's go through this together. I had mentioned this before, the first of its kind, right? First ever cash indemnity joint links benefit solution. This is going to play really well for those other survivorship, maybe standalone policies you're used to working at, or even that other carrier that had a reimbursement joint product as well. So keep that in mind there. That this is the first of its kind. It's pretty cool that we get to say this, called CareMatters Together. 2 people, 1 contract. I want to be very clear too. What's probably popping into your mind right away is that it's going to be husband and wife scenario, right? That's going to be your number one scenario that's going to pop into your mind. However, we can do a couple other scenarios as well. So if you're taking notes, feel free to take that down. We can do business partners, right? So if you have business partners, we can take them. We can do civil unions. We can do domestic partnerships. We can do folks that aren't legally married but have been together for a long period of time if they own a home together, right? We can take that. Our definition is pretty liberal. And also, this is a really cool, unique one as well. We can actually do siblings on this contract now as well. This is really unique. Take advantage of this, right? So utilizing siblings. So now you can create what I call a household LTC. Me and my sister can purchase a contract together. We're both the insureds, and we can share it amongst each other however we would like. Really, really valuable resource. Once again, it's going to be that cash indemnity story. This is everything I've already been talking about. It just kind of puts everything into perspective from a visual standpoint, right? What is Nationwide, the cash indemnity story on the left side of the screen there? No bills and receipts and no restrictions on how your clients use those funds. Example I always use, like I said, I'm very passionate about this because of my grandparents. My grandmother, unfortunately, had to move in with us, right? She didn't have any long-term care. She needed help. She moved into our family home with us. We turned our dining room into her bedroom. Well, she had a walker. She couldn't get around. And so we had to rip up all of our carpet on the first floor, and we had to put down hardwood floors. My parents did this, that they did this out of pocket. And why do I say this? Because if they had a cash indemnity policy, they could have covered it if she had a cash indemnity policy, right? Whereas reimbursement, maybe that's not covered. That might not be considered a qualified expense. They can only reimburse on qualified expenses. So we just want to make sure that we understand there's a lot more leeway with cash indemnity. There's a lot more flexibility that's out there as well. And now you have an individual product. Now you have a joint product as well. So a question about the premiums, we're going to get to that in a second. I want to run through those examples here really quickly. So this is how the structure is built, right? So how do we actually build the CareMatters Together concept? There are 3 benefit payout options, 48, 72, and 96, okay? So that's 4, 6, and 8 years of shared long-term care, right? This is shared. So I want to be very clear, if you select 96 or 8 years, it's not 8 years for both parties. It's a shared 8-year benefit that you can then shift to whoever needs it, wants it, etc. So this eliminates the purchase to have to do 2 individual policies. You can still do 2 individual policies if you would like, but we saw an opportunity to really jump in and help more families. People are more likely to do this when their husband or wives are involved. So here's an example. First example here, husband and wife scenario. Client goes on claim first. For 2 years, the male client goes on claim first. He then passes away. There's then a 2-year window where no benefits are paid. His spouse doesn't need long-term care yet. Now, 2 years later, she takes over at year 4 in this example. She takes over the remaining 6 years of payment, 72 payments. And now we just covered 2 individuals over 8 years of long-term care payout from Nationwide over the course of a 10-year window. That's where it's really, really valuable here. Now, the next question that may be popping into your mind is, hey, can Nationwide pay at the same time, overlapping claims? The answer is yes, absolutely. So in this example here, we have domestic partners on the screen. If they're receiving $5,000 a month from a policy, we're going to send them $10,000 where those benefits overlap. Really, really valuable to be able to tell your clients, hey, you can get 2 payments, right? They can obviously take less if they want to, but being able to put $10,000 in these clients' pocket cash is very, very valuable as well. Utilize this to your advantage. And then finally, maybe somebody has a very lengthy claim, right? They just have, for whatever the reason is, we have a longer than expected claim. We just shift all of the long-term care over to that one person, right? That's where this really comes into play. Is you have the ability to shift this and move it and kind of mold it however you would like on the fly, right? This is not something you have to predetermine who gets at what amount at the time of the issue, right? You're just buying a shared benefit, you're creating that household LTC, and you're pivoting it to whoever needs it. That just simply means, in this example here, John used all of the long-term care and Lori doesn't have any when she needs to access it. There is a death benefit payout still on this policy. It's going to pay out on the second to die. So just keep that in mind as well. Age ranges. Who can we issue the contract on? We can issue this from 30 to 70 years old. Okay, so 2 individuals, 30 to 70 years old. We can once again pay this 5 different ways: single pay, 5 pay, 10 pay. The only difference between the joint and now the individual is we have a 20 pay option instead of the pay to 65. And then we also have a pay to 100 option as well. So we still have that pay to 100 option. Like I said, I know there's a lot of long pay situations you guys utilize, a lot of standalone. I'm going to show you where we're still really, really competitive in that space with that all pay scenario and getting your clients this cash indemnity story. Final note here, once again, we have 2 insureds. They do have to be within 25 years of each other. So we just can't simply do a 31-year-old and a 68-year-old as well. We have that situation. Product limits, okay? So we have a minimum, we have a maximum. The reason this is important, once again, is if you have clients that are saying, hey, I want long-term care to be as affordable as possible, we now can fit that mold with Nationwide. We have lowered our product minimums to $1,500 a month outside of those 3 states on the screen there. And so now you have a really great opportunity to start getting 2 clients insured on one policy with a very low face amount and maybe grow with inflation over time. but now it's really, really affordable. We can get a lot of people covered with that cash indemnity long-term care, and they're going to have something versus someone not having any LTC as well. We also have a maximum amount of benefits. So utilize these minimums to your advantage, especially if you're in a market that needs to keep the premiums low. Utilize this 1,500 low threshold as possible. Nationwide's doing everything we can to make it as affordable as possible. This is by far the best part of the presentation, right? So if you're sleeping on Zoom, on GoToWebinar, right, feel free to wake up. And the reason this is important, right? So I mentioned before 5 different ways you can pay the CareMatters Together product: single pay, 5 pay, 10 pay, 20 pay, and pay to 100 monthly or annually. But now, when one person goes on long-term care claim, the full premium is waived. Let me repeat that again. When one person goes on long-term care claim now, the full premium is waived. This is an absolute game changer now. This is not how our individual product works. So let's go through an example really, really quickly. You have a client that is in a 10-year premium structure. They go on claim earlier than expected. They go on claim in year 6. They have a lengthy claim. So that means they can keep the premium dollars in their pocket for 7, 8, 9, and 10. We have that solution that's available to them, right? Okay, so keep that in mind. The full premium is waived. So my example again, they go and claim in year 6, they have a long claim, they can keep their premium dollars in their pocket for 7, 8, 9, and 10. We just saved your clients 4 years of premium, and they will still get their full long-term care benefits. Their benefits will not be diminished as well. So keep that in mind as well. We have that solution that's available to you. This is an absolute game changer. We're hoping that you're very excited about this because this pairs really, really well with that pay to 100 story, which I know a lot of advisors for you guys really, really like, right? So we can get clients in, we can really make those premiums manageable, we can pay to 100, and then if somebody goes on claim early, we can waive their full premium. Really, really valuable. Now, really quickly, I want to talk about too, if somebody recovers and comes off of claim, they just pick up right where they left off. Okay, so if they're in a 10-pay scenario again, and they're on claim for 2 years, they recover, they just pick up after those 2 years. Nationwide can never come back and ask for those premiums that they skipped. So just keep that in mind there as well. But this is a huge game changer, guys. We hope you're excited about it and utilize these maybe longer pay schedules to get those premiums down and have an opportunity to really help a lot of people in the LTC space. Inflation. So I mentioned this before. You can get clients in at younger ages, lower thresholds now, and grow their benefit over time. We have a 3% for 20 years, 3% for life, and 5% for life as well. So a lot of different opportunities that are available to you to help grow your clients' benefits. And that long-term care benefit is going to continue to grow even while your clients are claiming LTC. So if in year 1 they claim and it's $5,000 a month, the next year maybe they're going to get $5,500. Next year, they're going to get $5,800. The next year, $6,400, right? Whatever those numbers are, it still continues to go up, and you have that solution there. Tax advantages. I talked about this on the individual product. We still have that here on this product as well. So now we can do tax advantages, like I said, for business partners, for business owners. Utilize this as separately identifiable premiums. It still exists on this CareMatters Together product. Elimination period. Same thing. It still exists with Nationwide on the CareMatters Together side as well. Now we can do it twice. So for the first 90 days, calendar days, no benefits are paid, right? Day 91 hits, boom, $40,000 in this example because they have an LTC benefit of $10,000 a month. And now we can do this twice, guys. This is really, really valuable here. So first client goes on claim, no benefits for 90 days. Day 91 hits, boom, $40,000. Second client goes on claim, no benefits for 90 days. Day 91 hits, boom, $40,000. We just gave your clients $80,000 cash, tax-free, in the form of 2 payments that they can utilize however they would like. Really, really valuable. That's a great opportunity that's out there. Final note around the elimination period is that both clients do have to satisfy their own 90 days. So it's not a situation where one person satisfies for the whole contract. Both individuals do need to satisfy for 90 days. And then you're good to go there. So just keep that in mind. And so I'll end with this, right? Why Nationwide? Maybe you're new to us as a carrier, right? As a partnership. That's okay. But why Nationwide? So I just went through the products. We think we have great products, but we want you to know that we're here to help every step of the way. right? So you have Luke, you have myself that we can reach out to. We can help you guys with those processes. We can help you go through the product, right? We can help you, maybe you sell a product and we can help you file the claim. These next couple things, I think, really set Nationwide apart. Like I mentioned, we think we have a great product, but everybody's got good products nowadays, right? What really sets Nationwide apart are these next couple of things. Number one, we can create a plan of care for your client if their doctor doesn't know how to. So we have a medical doctor on staff that can get on a Zoom with your client and say, hey, how do we want to access this? Where do you want to receive care? What do we need to do? You have that solution that's available to you. You can work with us. That's a huge game changer with Nationwide. Secondly, we have our Care Network. This is a website that if your clients purchase a CareMatters policy, they get access to this website for free. I call this the LTC Google, okay? It is a website that allows you to go into this website, you just type in your zip code, and all of the care services around that zip code will populate. So now the example I always use is like my parents, right? If they go to a different state and they need care, I can pull up this concierge network, I type in the zip code, and now I can say, hey, mom and dad, there's a nursing home 1.2 miles down the road. Or hey, mom and dad, there's a home health care facility that can come in and administer care 0.8 miles down the road. This is all free of charge to you and your client. You have access to this when you have a Nationwide policy. It really sets us apart. And we're here to help every step of the way. So as you guys grow your business, as you become more comfortable with us, as you want to get appointed and licensed, etc., we are here to help you every step of the way. And I cannot, overstate that we are here and we have a vested interest in your business as well. And then I'll end with, once again, Nationwide, just as a company and as a carrier, a strong and stable company, Fortune 100 company, bigger than Coke, bigger than Tesla last year, which is pretty crazy to think about. We've been in the long-term care industry about 25 years, which is not as long as other folks, but we still have a great history, and we're coming up on our 100-year anniversary, and we're A+ ratings across the board, and as well as a visual company as well. So that's really great carriers, presence with Nationwide. And that's where I wanted to end today. I did want to pull up really quickly a quick illustration and just to show you guys some numbers here as well that's available, just really quickly. So this is one I kind of pre-ran ahead of time. This is a male-female client in the CareMatters Together solution, utilizing that all-pay scenario, right? So showing you for $150 a month for two insureds, they're going to pay for $100 till their age of 100. They're going to have $231,000 of long-term care, $2,400 a month. That's going to be distributed across 8 years, right? So this is a great feature that's available to you. It really hits home. That's utilize that all-pay scenario. And then I'll also show you, right? Maybe you have a client that has a bunch of money and they want to do a single premium, right? Get that immediate leverage right away. It does that as well, too. So this is an example, same 50-year-old clients. Now, instead of paying forever, they pay one time $100,000. They've just leveraged $811,000 of guaranteed long-term care, $8,451 per month to be distributed across 8 years, however they would like amongst the couple, right? So 8 times their investment. There's still a death benefit there as well, 3 times their death benefit. And if they wanted to walk away and get all of their money back, they can in year 11, and they can get all of their money back as well. So those are the CareMatters Together quotes. And then I also wanted to show you just an individual CareMatters as well. In this example, I had solved for $5,000 a month of benefit. And I know I'm running through that quickly. I just wanted to be cognizant of if there's any questions or anything like that. In this example here, that $5,000 of benefit for one individual, it's going to equate to about $5,500 per month. They're going to be done paying in year 10, and they're going to have access to $360,000 of guaranteed long-term care, $5,000 a month that's available to them. And in this case, in the individual case, we're going to pay out for 6 years. Okay, they put in 55 grand, they leverage 360,000 of guaranteed long-term care. I got a couple more pieces here, and I'll open up to any more questions that I didn't get as well. So underwriting, I didn't talk much on underwriting. Just know that we can really help you with underwriting. What I mean by that is we can do a pre-screen for your client. Maybe you come to Mike, you come to Courtney, you come to me or Luke and say, hey, I have a client that have XYZ issue. I'm not sure if I should pursue an application. You can obviously get that stuff to me and Luke. We can do it on your behalf. But if you would like, you can actually email an underwriter directly. And so you can now email the underwriter and say, hey, I have a client, they're 52 years old, they're on XYZ medication, they have XYZ issue, should I pursue an application? That underwriter will respond within 24 hours and tell you yes or no, right? Yes, please pursue the application based upon the information, or no, it's not worth your time. It's probably going to be a decline based upon that health information. So utilize this to your advantage. Pre-qualification really helps. If you click on this, it'll open our underwriting guideline as well. We'll get all this over to Mike and Courtney to share with you guys. But this really helps us from an underwriting perspective and really set a great precedent for you and your client there on a clean process and approval process as well. And then I'll end on this. Once again, I think this is a really great piece. Once again, knowing that we have a lot of folks that are used to writing that standalone or traditional long-term care space. This is a really great comparison for clients in the CareMatters Together side, paying all the way till age 100, and then it gives you different age ranges, different inflation, and different monthly benefits. So the reason I'm showing this here is we have this solution that really competes well in that space. So oftentimes linked benefit has been said, hey, it's too expensive, right? Because you have all of these bells and whistles, right? It becomes too unaffordable. Well, we're here to tell you that we are not unaffordable. We have an opportunity to really play really well in that market, in that standalone space that you guys are maybe traditionally used to doing with. This is a really great piece that shows you at a glance 40, 45, 50, 55, 60, 65, no inflation, and different monthly benefits to really give you a quick time advance there as well. And so I'm going to end there. I want to just also thank you guys again. I'm going to end too with the fact that we did have a new underwriter come under our team. Hopefully a lot of you guys know him from his previous carrier dates. Alan Gregoire is now with us as our head underwriter here for CareMatters at Nationwide. So we're really excited to have him on board, and we know a lot of you guys know him already from his previous carrier experience, and we are more than happy to have him on our side now. So I'm going to end there. I'm going to kick it back to Mike with any closing comments or any questions. I didn't see any more come in. I'll end with my information up on the screen there as well. But thank you guys for joining. We're really excited about the partnership, and anything Luke or myself can do to help you guys, please let us know.
Great. Thanks, Kyle. We're going to go ahead and open up for questions here in just a sec. Kind of a standard reminder, our marketers will be following up with everybody on the call today, getting any other questions that might be out there answered, maybe asking or answering some specific questions that you've got about a case that you think may bubble up. It's important to note that the compliance landscape being what it is, we need to get appointment paperwork handled before it's technically legal, if you will, to be out there presenting and running illustrations and things like that. There are life insurance checkoffs and long-term care checkoffs that have to be handled to the carrier's satisfaction and frankly to our satisfaction. We want to make sure that we're doing things correctly so as to not create problems here for ourselves here at AIM or for you. I'm going to go ahead and unmute as always. If you don't plan to answer or to ask a question, if you wouldn't mind self-muting, that allows us to work with folks, interact with folks, and not have it be a situation where we've got dogs barking and tea kettles and all those kinds of things. So question just came in about who to call for quotes. You can go ahead and run those through us. As I said before, we've got to get you appropriately licensed with CE and AML and things like that before we can proceed legally out there. So you can call the marketing office. We can get the information from you. We can get the paperwork to you to get that contracting piece started. So anybody with questions as we kind of wrap things up? Okay, well, looks like everybody's good. Got some hands going up, but we don't have any questions coming in that I can see. So go ahead, finish that up. Quick reminder, next week's webinar, again, Wednesday, and again, 9 a.m. Pacific time. Next week's webinar is going to be about short-term care and why it's such a crucial piece of any agent's portfolio. It's the kind of thing that when you have it available in your states, unfortunately, Washington, New York, and California doesn't have it available, but in the other states, you're going to want to have it, and you're going to want to have it available. So with that, we're going to go ahead and wrap up. Appreciate everybody making their time available. Gentlemen, we appreciate you joining us, and we'll be talking to everybody soon. Thanks.